Hello from Trend Signal for our review of the data and events of the week beginning the 2nd of November. Start of a new month, new challenges. Equities had a stellar performance really in October. Certainly the US indices recovering all of August losses, really, down to central banks largely, I suspect, continuing to feed the market. In fact, US and most global indices look pretty stretched really as we start November. Question is, will they be able to maintain this sort of trajectory? Certainly, the signs are not looking good first thing on Monday morning, although been quite a squeeze in the DAX already this morning, rebounding 160 points. But Far East markets, Australian markets were weaker. They had set the tone for the European opening this morning, choppy already, as I said, with the DAX rallying sharply from the sell-off first thing. Same old story really though, weaker or disappointing Chinese data over the weekend, and we've said that several times over the last 9 months. Manufacturing PMI in China was slightly lower than consensus, but importantly below the 50 level, which indicates a contraction, albeit very modest. Here we go, manufacturing PMI, so 49.8 expected 50. That's what's causing the problems for markets first thing. Important week this week, the first week in November, the first Friday of the new month, signifies the release of the US employment data referred to as non-farm payroll. That comes out on Friday. The Fed's got two non-farm payrolls before deciding in December regarding rates. The next and last meeting for the Federal Reserve this year is on December the 17th and 18th. So it's make your mind up time. Last week, equities had a mixed week, really. FTSE was a shade lower. The Dow and the S&P in the United States were unchanged. The DAX was a shade lower in line with the FTSE. Nikkei had a better week, putting on about 260 points, about 1.5%. Currency markets, euro was flattish, but sterling got squeezed higher again, up another 115 points. This is all ahead of Super Thursday this week with the release of our interest rate decision, quarterly inflation report, minutes and everything, really. So a bit squeezy there. Aussie dollar, that came off last week. About 140 pips in the end. Precious metals suffered. Gold $23, platinum down 17, palladium down 18. So all struggling really. Although going in the other direction was oil, as some of the fundamentals didn't look quite as bad as some market participants were expecting. Oil up a buck and a half, which is what, about 3%. So equities following weak Chinese data over the weekend, pretty weak generally. As I said, I've reported that more than a few times, but markets keep bouncing. Indices obviously look stretched after such a run-up that you see in October, but it is difficult to get very bearish, really. Seasonally, equities tend to be strong at this time of year. Bund yields remain flat to negative. We reported on record low 2-year yields in Europe, which is hardly encouraging investors away from equities, and that's really what central bankers want. They want the economy to grow and demand to increase. They don't want consumers sitting on their hands, and they want companies to invest. So what about prospects? Well, fundamentals do not look great, but they don't look much worse than they were 3 months ago. Central bankers continue to support the market, so it's difficult to see what other events will take it lower. The global economy is not in great shape. We reported that over the last couple of weeks. China, Japan, Eurozone, all having their own difficulties, whilst the US economy is not quite there yet to warrant that rate rise that we've talked about. Maybe by mid-December they will be. Time will tell. So this week, regarding the calendar, the data and events, it's a busy economic calendar this week. Plus it's the tail end of the third quarter earnings season in the United States, so it makes for quite a busy schedule. This week, key announcements. We've got rate decisions in Australia and the UK. As you can see already here on Monday morning, we've got all the manufacturing data coming out in the UK, manufacturing PMI, ISM manufacturing in the States. We then have on Monday night, Tuesday morning, the Reserve Bank of Australia its decision. We're not expecting any change in rates, so remaining at 2%. But as ever with all these central banks, it's not what changes they make, it's what they actually say. So the Reserve Bank of Australia statement will be closely scrutinised. So that'll have its effect first thing on Tuesday morning. Construction spending as PMI in the United Kingdom, but really we have to wait until Wednesday before it all kicks off again with two central bankers speaking. Firstly, we got Mario Draghi, or Super Mario, with respect to the ECB and the recent announcement about extending QE. Mario Draghi's words will be very, very closely followed, 9 o'clock on Wednesday morning. We then got the services PMI data out in the UK and in the US, curiously referred to in the United States as non-manufacturing, but that comes out at 3 o'clock on Wednesday afternoon. We've also got Janet Yellen, the chairperson of the Federal Reserve, testifying in front of, I think, the Financial Services Commission, I think, in Washington. Anyway, whatever she says tends to have an effect on the market, so it's worth noting that one down as well. We also have the advanced sort of reading on employment data in the States with this private payroll, ADP, on Wednesday, expecting 183,000, more volatile than the Bureau of Labour Statistics data on Friday, but does give us an insight. We're all looking for a better data. Curiously enough, the volatile ADP had a better number than the Bureau of Labour Statistics, but they're looking for a slight pullback. We are looking for a better number from the non-farm payroll, though, later on Friday. On Thursday, we have, well, it's called Super Thursday, really. It's the release of the interest rate decision, meeting minutes, and the final inflation report for the year from the Bank of England. If you remember, I think, what was it, 3 months ago, the Bank of England merged the quarterly inflation report, the monthly interest rate decision, and the minutes into one splurge release, as it were, and that's what we have on Thursday. Key points, really, I suppose, no change in rates. Carney may present his sort of usual hawkish self that he is, but we think that the data doesn't really support a rate rise yet. Inflation report, I suppose, oh God, you should almost call it the deflation report. However, oil prices falls from a year ago are going to fall out of the year-on-year calcs in the new year. So it looks as if inflation will start to edge up in the new year. That's all they can really say in it. I'm not sure it's going to be particularly significant in terms of forecasting a rate rise in the UK. I think that's still a few months off at the moment. And that brings us on to the final and most important data release of the week, in fact of the month really, being the non-farm employment data from the United States, out at 1:30 on Friday. It's got 179,000, ranges from sort of 175 to 185. I think the medium is 181,000, and we're expecting the unemployment rate to remain unchanged at 5.1%. As I say, very, very important data. One of two remaining reports this year that will affect exactly how the Fed decide on their last meeting on the 17th and 18th of December regarding rates. Very exciting times. We are back to 5 hours difference with the United States now. They've done their daylight savings this past weekend, so 5-hour difference. Equities back opening at 2:30, closing at 9 p.m. Most data releases around 1:30 now, as opposed to 12:30. Only happened for a week, but we had a 4-hour difference last week. All back to usual now. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.